Let's take a look here at the stock market as we look at the 60-minute chart of the S&P 500. And you can see this was a down week most of the week, and then Thursday and Friday the market was able to get a uptick in there, but still down for the week. This all happened Sunday night as the president came out and talked about restricting Chinese investments in the U.S. And you can see that decline came overnight Sunday, and it accelerated for a pretty big downside day here on Monday. Then there was another attempt early in the week to calm the markets as trade advisor Navarro came out, and he says this is really only about China. And the Mnuchin did that again, as you can see right over here on Wednesday as the markets were selling off. So they really try to manipulate these markets. It's unbelievable. Tuesday we got a bounce in here, and then there were some more overnight responses from our allies about the trade war, what they planned on doing. That got the market selling off, but Mnuchin wouldn't have any of that, and he stepped in. Then you get this oil jump as the president threatens the buyers of Iranian oil, and that lifted the market into Wednesday morning. But look what happened. The NASDAQ sellers and Russell sellers really came in, and that pushed the the S&P 500, to the downside. Not much news on Thursday, except Bitcoin moves below 6,000. Our target for the year was 4,500, and that's when Bitcoin was 17,000, and we think we're going to get there. Friday, some news came out overnight. The Eurozone, well, they put together a migration deal. Maybe that calms things down for Merkel, and the dollar fell hard and the euro moved up sharply, and that gave a lift to the markets, and they have been able to hold up throughout the day. A lot of news came out on Friday. Core inflation up 2.3%. That's a 6-year high. The second quarter GDP cut down to 2%. So much for a big growth coming with all these tax policies. Consumer spending is weakening, and also the market gets a lift as the bank stress tests, they were mixed. Big ones like Goldman Sachs, they're not able to increase their dividends because they really did not do well in the stress test. Wells Fargo did really poorly. We don't like that stock at all. But the financials still, with some relief, get a bounce, and that's what lifts the markets here on Friday. So they're up a little bit, and here as we are with about 2 hours left to go in the trading session, the stock market is still holding its gains for the day. So the S&P 500, we talked about that key area of about 2742, and had pointed out that if that broke, that the market was likely to sell very hard. Here's the S&P 500. It's so interesting because, normally there's a good synchronicity between all of the indexes. However, the Dow, I put that on here now. You notice that purple? That's the Dow cycle, and that's this bottom that came in right here and is bringing the rally right in here. So that's what's going on right over here. The Dow is doing better in this little rally phase right there. The S&P 500 is getting a good bounce with that. You can see that right there. And the Russell and the NASDAQ are more lagging. And this is where we're looking for that decline into mid-July. This is July 12th through July 16th right in here. And we think that the rally we have right now and this uptick is going to fail. You can see here that red note, cycle support violation, is negative. And if it broke that, it would likely fall very hard. And there you could see as the selling came in and hit the top of that support zone. The best case that we can make, a bullish case that this declines and then, finds good support, is at around 2670. And we think 2670 is where it's going to head in the next week or week and a half, with the possibility that it's much worse than that. So the possibility that it's much better than that, well, I don't think it's very likely based on everything that we're seeing in here. And we're going to call for next week and the following week to be this period of high risk that we've been talking about right there. If we only get some minor little pullbacks in here, we don't get much more, then it's going to say something about some extraordinary strength in the stock market, because this is a period where the likelihood of decline is there. And if it can't take advantage of it on the downside, it's going to mean that there is some incredible strength. Momentum now has turned negative in here, and that's after a very long period of positive momentum where the S&P 500 moved from 2670 all the way up here to 2790. So that was a 120-point move on the upside in positive momentum, and here the momentum just turns negative right over there. So that is a cautionary thing. We're going to call for a down week or 2 weeks coming up in the stock market.
I'm going to the city and I'm going to do a steady show. And I know all my fans want to learn how to make some dough. I've been